Welcome to TheoTrade. This is Corey Rosenblum, and it is May 24th, 2018, and you're watching the Theo Night video. We'll talk about range contraction, range expansion, and we want a breakout. Want this market to break one way or the other? We don't care which way necessarily, but give us a pickup in volatility for the future. So we'll take a look at where we are, what levels are we watching in the main index products, and we'll do a quick and simple stock scan for a couple of techniques and strategies you can start today or get ready for our breakout. We'll start with the S&P 500, S&P futures. This is our 2018 levels. Had a big run up in January, crash into February, and since then we've been doing nothing, going sideways, forming this consolidation triangle pattern. We are in a rectangle within a bigger triangle. So it's essentially a consolidation within a consolidation. What levels are important to us? The 20-day exponential average is overlapping our roundie at 2,700. The last couple of weeks have been within a 40-point range, 2,740, 2,700. The Dow mini futures, not that much different. But their pivot levels, again, 20 exponential, 24.5, and 25,000. Looking for a breakout into the future. The Nasdaq, although it hasn't retraced necessarily as low and is not forming as clear of a triangle, we still have consolidation. It's beneath 7,000 on a round number, and just under 6,900. Again, back into the 20-day exponential. The one exception, again, is our Russell futures. It made all-time highs at the 1650 and has since pulled back. Markets tend to expand and contract. Periods of range expansion, trending moods, volatility movements tend to be followed by periods of range contraction or consolidation, or range periods. So, if we are having a range period within a range now, we will be looking for a future breakout. And there's different ways to take advantage of that. One of which is to trade individual stocks on a swing basis that are showing similar consolidations and getting ready for their own future breakouts. Let's start with our ADX scan. ADX is the average directional index indicator, and we can use this either as a scan tool on the scan component of the thinkorswim platform, or, as I like to do it quickly, just as a tool in a customized watch list. So watch list on the left side of our thinkorswim platform, ADX, click that in, and we just arrange the data. Click this to see a high ADX. That would suggest a trending stock, or click it to see a low ADX, low average directional index, means we are in a trading range. Starting with Alexion. And what the idea of a trading range environment, or a stock scan to select trading candidates that are in a range, we can play back and forth. So once a range is established, the rule for trading tactics is to buy the low of the range, trade and hold the position until the stock reaches the top of the range, and then either take profits or flip reverse and go short until it potentially goes to the bottom of the range. For Alexion, ALXN, which happens to be the most compressed stock in the S&P 500, those levels are just under 123 per share. It's also the moving average, and 105 per share. Strategy 1, again, is to play strategies within the range. But we know there will be a future breakout event, most likely. So if you do not like to play back and forth, short the highs, buy the low tactic, then wait for this. Put this on a separate watch list and get ready for a future breakout. That will be above 125 or beneath 104. Similarly, in U.S. Bank Corp. Now, not all stocks are going to be perfect, but this is just going through an average directional index scan. It's going to be roughly 49 per share, and 52 for its future potential range breakout. Beneath that is going to be resistance and support. AMT is similarly in a wider trading range. It is testing or touching the low, 135. What's the upper pivot? 147. That is a range with a potential buy candidate or a future breakdown event. COO, Cooper Companies, not a whole lot with this one, I don't think. There are probably better candidates, but nonetheless, just taking a look at our compressed stocks for potential candidates. And DGX, just to name a few. Again, markets go through expansion or trending activity and then contraction. On your own platform, feel free to draw in individual trend lines. And we get ready for a future breakout event one way or the other. What's nice about breakout events is that they do not generally have a directional bias or a directional component. The idea is that that which is compressed now does a range expansion event in the future. Similarly, that which is range compressed now has a range breakout event in the future. That's the power of this type of scan. Of course, there are ways you can trade these with options. A couple more. H&R Block, very compressed, beneath 28 per share and just above 24.50. What might a future breakout look like on stocks like this? You can do the opposite for our high ADX scan. We'll take a look at a good little overpriced burrito stock, as we call it here at TheoTrade. It's Chipotle Mexican Grill. Chipotle spent the better part of late 2017 and early 2018, with the exception of a little bear trap here, within a lengthy sideways trading range. Range expansion leads to range contraction. Range contraction leads to range expansion. So this is what we would be looking for whenever the stocks in our low ADX scan component list eventually break out, either to the upside or the downside. We are looking for a range expansion event. Volatility tends to be easier to get a sense of than direction. One more name as we finish would be Philip Morris, because it had a recent sideways trend, a little bit of a down move, but back and forth. Again, once a range is established, the idea is to short the highs, buy the lows, short the highs, buy the lows. But we always are on guard or are prepared to trade a future breakout. So that's what the idea is for the moment, while we sit within a little rectangle in a larger triangle. This is Corey Rosenblum with TheoTrade, bringing your Theo Nightly video.